Anyway, here is an example of which I absolutely find fascinating. This is somewhat of a just you'll have to indulge me on this one because I find this absolutely fascinating. FTX. I don't know how many people know who FTX is or are familiar with this, but this article is going to go into it briefly. But FTX was an exchange, right? You've heard of stock exchanges. Well, this exchange deals strictly with cryptocurrency, Bitcoin, Solandra, I think, is another one. Ethereum is another one. These are cryptocurrencies. I'm not going to get into the whole situation with what a cryptocurrency is, but the most significant thing is that this company was run by a guy by the name of Sam Bankman Fried, and it was the largest crypto exchange in the world, and it went belly up. And it went belly up because of fraud, according to the government, which just took this guy to trial and won. And the charge here was is that this guy took the money, never did what he was supposed to do with it, and spent it all on himself. It was a classic scam, a classic like pyramid or whatever. And he sat back. He didn't do what he was supposed to do with the money. So people are out all their money. Well, it turns out that might not exactly be the case. And this is an article, and this is from TechSpot, the website, and it's by Erica Murphy, and it's February 11th, 2024. It came out yesterday, and it's entitled, Could FTX Customers Get Repaid in Full After All? The soaring price of Bitcoin has fattened FTX bottom line considerably. And it goes on to say, we all know the sad scam story when FTX multi-billion-dollar cryptocurrency exchange spiraled out of control and went bankrupt over the course of a matter of days in 2022. Investigators quickly discovered roughly $10 billion in customer assets were missing. As Sam Bankman-Fried awaits his sentencing after being found guilty last November of 7 criminal counts, it looks as though what he wrote in a Substack post in January 2023 may be true after all. Specifically, that FTX US should be able to return all customer funds. But how could this be? From the beginning, it appeared that the reported 1 million FTX customers that lost their funds likely had lost them, or at least a good portion of them, forever. While some of the lost money was traced to be wasted in supporting an extravagant lifestyle by Bankman Fried, another good portion of it was invested. Investments that have appreciated significantly in the last 2 years. There are other factors as well, namely Bitcoin's remarkable recovery, all of which could mean potential good news for FTX customers. We currently anticipate that we will have sufficient funds to pay all allowed customers and creditor claims in full, FTX lawyer Andrew Dietrich told the judge hearing the bankruptcy last week during a hearing. Bankman Fried has maintained that a substantial recovery for customers was possible as FTX US was solvent and that FTX International had many billions of dollars of assets. He claimed that when the new CEO John Ray III and the Chapter 11 team took over, FTX US had $350 million net cash on hand beyond customer balances, and that those funds and customers were segregated from FTX International. More significantly for the recovery efforts, Ray and his team have collected more than $7 billion clawing back Bankman Fried's assets. Among other efforts, those efforts included going after the millions given to K5 Global, which invested in companies like SpaceX. So the math is looking pretty good for FTX investors. Their only worry is the bankruptcy process itself, which can be unpredictable. As attorney Dietrich told bankruptcy judge, there is still a great amount of work and risk for clients looking to be put whole, but the team has a strategy to achieve it. So this is fascinating. What is fascinating to me is, and I'm going to go into this in a moment because CNBC did a report on the collapse of FTX. And what's interesting here is There is a class of investor that goes after distressed assets. That's what they're called. In other words, you have a right, right? You've invested in a company. The company has gone belly up. It is basically you put in $100 for a share, and it's now worthless, quote unquote worthless. However, there is a process to try and get back that money, particularly if it's a fraud situation. It's not a legitimate. The company's gone on, but you're a victim of fraud. As we have seen with respect to commercial real estate in China, uh, uh, companies, sovereign wealth funds, other investors, private equity, they bought up that debt, expecting and hoping that the government would backstop it, meaning they would see it as such a concern that a business of that size would go under, that it would ripple out, and they couldn't afford to have that kind of an event happen, so that the government would actually pour money into it to make the company solvent so that it would come back again and investors would get some money. Bernie Madoff was a very similar situation. That was, of course, a scam, a fraud, but the government came in, and because it was a fraud, they began going after people who benefited from the fraud, and they got a lot of money back. And normally, the when you're a victim of a scam like this or a fraud, you usually, I mean, it's very rare for you to get the money back. I mean, the numbers are pretty stark. However, if you're a hedge fund, that's your business. If you are private equity or some kind of business, this is your business to try and make, and the profits are amazing, how much money you can make because it's so risky. And in China, they bore the risk, and that was a bad bet because China is not backstopping those losses. But here, the government, it appears as if Sam Bankman Fried, who was painted as a scammer, may have put that money in good places where the businesses he invested in and the areas where he put the money appears to be doing really well, and you could have people get back some or all their money. Now, if you bought that debt, if you were a private equity or someone who bought that debt, let's say pennies on the dollar, you have an opportunity to make a boatload of money. And I'm going to go into a story about that right now. But first, I'm going to go into the Sam Bankman Fried. I'm going to go back to this, to CNBC, and I'm going to tell you, and this clip is going to show you exactly what I mean about people making the decision to sell off their debt to somebody who would buy it. And you can see the reason why, and they'll talk about it. But if you're someone who has something that is considered quote unquote worthless, it may be worth it for you to get some money and not have to wait for a bankruptcy court and all that kind of stuff. It's worth it for you to get some money. And if someone's willing to buy your worthless stock, instead of sitting on this thing and waiting, you could get, 10 cents on a dollar, 20 cents on a dollar. And that's what these guys are who have FTX stock are banking on. But here is the story from CNBC. And hopefully it will play from exactly the spot that I wanted to. Let me give it to you here.
For comment. While the bankruptcy process and other legal cases attempting to recover money from the FTX fiasco wind their way through the courts, some customers who need cash now are turning to other options.
Multiple companies or individuals can actually go ahead and put in a bid for your bankruptcy claim.
The biggest question on the minds of more than 1 million customers and investors who lost billions on FTX. Will they ever get any of their money back? And how much of it?
On FTX, I had almost 60% of my portfolio, of crypto portfolio. Based on all the other bankruptcies and everything that happened in the crypto market, I was really, really worried about getting anything back and then how long I would have to wait. I started looking at other ones like Mt. Gox, and they took almost like 8 to 10 years before the people even got a portion of it back.
So Bogumshi Kanagunla goes online to see if he has any options to recover at least some of his money more quickly.
I started looking into how can I get something for these, for these bankruptcy claims.
He found a company that would help him sell his bankruptcy claim for a small percentage of its value for cash. Here's how it worked.
The bankruptcy claim was for $174,000. The buyer was, after all the due diligence and everything, It went down to like 11% of the 174,000. And I think that came out to almost around 19,000 or so. So I got a certain percentage back. I guess the best way to say it is it's 11 cents for the dollar.
Years later, if the bankruptcy process recovers more than 11 cents on the dollar for that claim, then the buyer of Kanagunla's claim pockets the difference and turns a profit.
Let's say in like the 174,000 that I lost in FTX gets recovered in 10 years, right? I will have zero regrets.
Zero regrets because Kanagunla has a different strategy.
I wanted to get the cash from the bankruptcy claim primarily to invest in crypto again. I felt like as if there was a good chance for me to make money in the next 5 to 10 years. So mine is always a long-term perspective.
For other FTX customers, it's a waiting game.
This is just an example. I don't have much time, so I just want to get into it really quick. But what kind of a person would buy this debt, and what are they looking for? Well, here's Prof G, Scott Galloway, on his channel. This is from a few months ago. He's a guy who bought this debt. Now, mind you, as I said at the beginning, this debt looks like it's going to be paid in full, but it's a risky thing to do. And if you have the money, if you're liquid and you have the money and the desire to do it, you can make some money. But here's Scott Galloway. He's talking about what his strategy was and what he did. It's fascinating.
And then the other news on FTX is that this is the final week for FTX's creditors to submit a claim to get their money back. Obviously, FTX went into bankruptcy last year. So far, $16 billion worth of customer claims have been filed. Only about 10% of them have been resolved. But more importantly, when we discussed this yesterday, Scott, you casually dropped that you've spent, what, $1 million buying those claims? So could you give us the full rundown on that investing strategy, which I find fascinating?
Yeah, so this is not investment advice.
Okay.
But I'm just, part of this program is we want to be transparent. I find that the majority of people on financial news telling you what to do just are totally opaque as to what they are actually doing. So, and see above, I invested in the Oddity IPO, and when it ran to 55, I thought, oh, I'm going to hold on because I like to be a long-term investor, and I'm sitting here and it's at 27. That's okay. Anyways, I feel good about the company. So, but I like the idea of running into the fire. And I have made good money in what you would call distressed assets. I do not own a single coin of crypto. I'm on the board of Ledger.
Have, right?
What's that?
You never have.
No,
right?
I've never purchased a coin. I'm on the board of Ledger because I wanted to learn more about crypto. They're doing a great job. They're coming out with what I think will be sort of the Apple of digital storage called Stacks. But I'm a crypto bear, and I think the evidence shows that that's true. However, you can go out now. So FTX has gone bankrupt, and now it's up to the court administrator to try and uncover all of the different assets hidden everywhere. As a matter of fact, I think that one of the co-founders had $1 billion, and the court administrator is going to get that back or claw that back. And then once they claw it all back, they pay their lawyers 100 or 200 million, and then they distribute it based on your ownership and based on where you are in the capital structure, et cetera. And I was approached by someone who said, I think this is a great investment opportunity, and you can buy claims for about 25 cents on the dollar. So I've been buying claims against FTX and Celsius for about 25 or 27 cents on the dollar, thinking that when all is said and done.
Describe what that actually means, buying the claim, because it's kind of a strange, like, derivative concept.
Sure. So the company goes bankrupt. It had $1 million it was a brokerage technically, or an exchange, and they had $1 million of my money, and they go bankrupt and I have no access to it. I have technically $1 million claim against FTX. And now that it's bankrupt, a court administrator is appointed, and they will go in and find out what assets are there. And if the total claims add up to 10 billion and they can find 5 billion in assets, they will then distribute 50 cents on the dollar to all the claimants. Now, it's more nuanced on that based on certain claimants have priority over others, et cetera. But effectively, a claim is worth something unless the company has no assets. And this is a company that has a ton of coins. It has cash. It has investments. I mean, for example, I believe they own, I I think they own some of it. Is it either Nvidia? I forget what they own. They own some hot. They co-invested in Sequoia and some companies. So
Yeah, they have a
there's
big venture
assets.
portfolio. Yeah.
Yeah, there's assets. They have a whole venture capital portfolio. There's assets at FTX, cash, coins, all sorts of shit. So, for example, they have an ownership stake in Anthropic, which is going to likely be worth a lot given the mania around AI.
Yeah.
So, anyways, the point is, people don't like these things stink as they should. They really have a foul stench to them. People don't want to wait for 2 or 3 years for the court administrator to work through all of this and then distribute the funds. And people are running from the fire. I like this a lot. So I just bought a claim. I think there was originally $1 million claim against FTX, and I bought it, I think, for $270,000. And I'm willing. You want to play to your strengths. What I'm willing to go illiquid. That's going to be hard to resell. I'm willing to wait. I have no needs. I can go illiquid. I have a long-term time horizon. This is something that requires both, which usually connotes a higher return. And I'm thinking, and it's easy to think this way, but I'm thinking I'll get 50 or 60 cents on the dollar for and I bought these claims at about 25 or 27 cents. So
that's extraordinary. That is absolutely extraordinary, and it's a way that rich people can get rich. Now, again, as he said, it is very risky. And it is not something that the average layman, who probably doesn't have that kind of money laying around, but this guy's a rich guy, that you would want to do. However, if you could imagine, like Anthropic, for instance, I've heard of that. If you could imagine being able to get in pennies into Anthropic, which could be one of the biggest AI companies around, $270,000 could be tens and $20 million once the dust has settled. And as we know from this earlier reporting, it looks like people are not going to get pennies on the dollar. They're actually going to get their full dollar. So I just thought that was absolutely fascinating, very interesting. It's, this is something that is like, I wanted to bring it up just sort of to give you the sense of, just investment. Part of what this channel is you're going to find me talking about politics. You're going to find me talking about the economy, tech, entertainment, and all of that kind of stuff. But you really, what I really want to do is I want to give people inspired to take risks and take chances and really do things. And be aware of and not miss out on things that are happening in the world, because we're constantly thinking about, oh my God, Donald Trump, and oh my God, the Republican Party, and oh my God, this, that, and the other thing. There is a world of things happening out there. And if you know how to work the system, you can do incredible things. If you know how to be patient, you can do incredible things. If you know how to have a little bit of discipline, if you have the information, if you have the knowledge, you can do incredible things. And I just want to make sure that people are aware of the fact that there are amazing things going on other than Donald Trump and what the rest of the media is talking about.